Judy Ward, we've seen tremendous volatility in the market from last summer all the way through January. So how have your clients, individual investors, reacted?
Well, contrary to what you might hear in the headlines where everyone's panicking, we actually looked at like workers and 401k plans and the event in August where the market was down. And actually, this past January, what we've seen is less than 2% of 2 million workers in 401k plans really have done nothing. They have stayed the course. Now, that means that they haven't transacted, but they have been calling and they have been checking in on the website. So those volumes have gone up, but in terms of transactions, really less than 2% have really done anything.
And when you speak to them, for the nervous ones that do call, how do you counsel them?
Well, a lot of times we might say that, what you're hearing in the headlines or what you're seeing on TV is not what's happening in your account. So let's talk about your situation, your account, and make sure that they're diversified and have an asset allocation that's appropriate for them.
And one would think with all this volatility, something gets thrown out of whack and you would need to rebalance a part of your portfolio, or there's an opportunity to buy something at a discount which has gotten thrown out with the bathwater.
Right.
So what do you do in those circumstances?
Yeah, I think there's two things. So for those that are still contributing, for example, to their 401k or into an IRA, absolutely continue to contribute because you're buying things on sale. It's take advantage of the volatility. But also, and last time I was here, Greg, we talked about the importance of rebalancing. It really is important to make sure that you're maintaining an asset allocation based on your time horizon and your risk, and make sure, and this is a great opportunity to also rebalance to your target allocations.
Now, every now and then, big drops do happen. Mm-hmm. Black swans do occur. So how do you counsel your clients for the ones that are really nervous? Because, once again, it does happen.
Right, and I think we've seen in recent history, we've been through 2 bear markets, a handful of corrections. So I think we've got some experience with this now, and we can tell investors to keep a long-term perspective if their goals are long-term. Look at what we've lived through, and we have come out ahead each time. Now, it may take a little while in terms of these bear markets, 4 to 5 years to recover, but we have recovered.
And then finally, what do you tell investors who don't have that much more time to invest? I'm talking about the boomers specifically. They're going to be retiring sooner. They're in retirement. They need that money. They can't afford to deal with a severe correction.
Right, and I think in those cases, again, it comes back to having the proper asset allocation. So you shouldn't be 100% in the stock market if you're close to or into retirement. We think at Rowe Price a balanced approach is more appropriate. So the volatility will be less for you. And also think about things you can control, right? You can control your asset allocation. You can control your spending. Some people might have some flexibility as to when they retire, but look at things holistically, including what you expect your expenses to be, your income sources, and then how much you might have to rely on your portfolio, and make sure it's properly allocated.
All right. Thanks a lot, Judy Ward.
Okay. Thank you.
Thank you for watching The Street.